The Fed holding interest rates steady as expected, but making it clear that it is not yet ready to start cutting. So here for more reaction to this Fed decision is Dennis Lockhart. He's former president of the Atlanta Fed. Dennis, it's great to have you here. In your notes, I sort of have your first key point as all eyes on March, looking for the first cut. Seems like that's largely off the table. What's your reaction?
Yeah, I tend to agree with you. I think the committee, by putting that sentence into the statement, was trying to reduce the frenzy of anticipation around a March move. And it'll be interesting to see how Chairman Powell actually elaborates or interprets that in the press conference. But they didn't have to put that in, and that clearly shows they're trying to calm things down so that they, don't have so much discussion of a March move.
Yeah, Steve Leisman said it looks like the expectations came down sort of immediately after that statement came out for that move in March. Is the risk that if you cut too soon, inflation could re-flare up when perhaps it's not completely under control?
I think what's on their minds at the moment is this very strong top-line growth in the economy. And if they were to cut too soon, they might very well stimulate to the point of a resurgence in inflation. So they certainly don't want to risk that. If the growth numbers were closer to trend, more around 2% or even a little bit lower, it might be a different story. But they're running the risk of adding fuel to a fire that could create a reversal of the inflation picture.
Dennis, it's Dom. There's been this tug of war that's been playing out with regard to whether there is a tilt towards easing financial conditions or tightening financial conditions. On one hand, interest rates are well off the cycle highs that we've seen. At the other end of the spectrum, you've got mortgage rates that are significantly higher than they were a couple of years ago, tightening versus loosening. Mm-hmm. We have stock markets at record highs. That's a kind of loosening of financial conditions. All of these back and forths are happening. On balance, your opinion, is the environment right now tighter or looser enough for the Fed to actually make a change to policy without causing all kinds of volatility?
Good question. The way I'd respond is I think they are reasonably satisfied with financial conditions at the moment, notwithstanding what you point out about mortgages. I look at the 10-year Treasury, and it's basically orbiting 4%. I think the committee is happy enough with that, and the committee probably doesn't really believe or have a lot of confidence they can manipulate market interest rates very much. So they just want to set the policy and let the markets react. I think their view is that at the moment they're still restrictive, clearly still restrictive, but at a satisfactory level.
Does it seem to you, Dennis, that we have avoided the possibility of recession entirely?
Boy, I mean, based on the data we've seen in the last few weeks, you'd have to come to that conclusion. You never say never, and certainly the members of the committee are always going to be aware of the risk of a shock or the risk of a downturn that comes as a surprise. But we appear to be into a soft landing, I would argue, and the recent data suggests that that's likely to continue.
Dennis, before we let you go, is there anything that you think would be something Jay Powell would want to seriously communicate to reporters in the next few minutes here?
I kind of expect him to do what he often does, try to keep his options open, not take a rate cut in March totally off the table, although he'll have to be interpreting the sentence that was in the statement. And in general, reinforce the messages that they are committed to getting the inflation rate down to 2%. And I would expect to hear some words like patient or cautious or careful, as he said in the past.
All right. Dennis Lockhart, former Atlanta Fed president. Thank you very much, sir. We'll see you soon.